Hello everybody, Adam Hewison here, co-founder of MarketClub, and today's the 25th year anniversary of Black Monday. That was October 19th, 1987, so you have to be around quite a while to remember that. But the question is, has anything changed? The sad news is I don't think it has. A panic is a panic is a panic. The reality is when everybody wants out of the market at the same time, there are not enough doors open to stop a mass exodus. That is the history and the nature of market crashes. It is why they're called panics. Now for the good news. With our trade triangle technology, you'll be alerted before a panic takes place. Such was the case in 1987 and also in 2007. I've just finished a new ebook that can help you avoid panics and crashes, and you can download it with our compliments. The file's around 92 megs, so it'll take a little while because it has video in there too. Here's the link. Members of Market Club were handily exited positions in 2007 with a profit, and they avoided the market's treacherous downdraft. In fact, many members of Market Club were made money on the short side of the market. Oftentimes, shorting the market is a faster way to make money than being long. Today, we're going to be looking at Apple. Let's take a look and see what's going on there. Is it a buy? The market has pulled back over 10% and is now at a key Fibonacci retracement level. The intermediate trend is down, and Apple is set to announce earnings next week. Should you buy today? We will explore that question in today's video. Okay, enough on that subject. Let's go to the markets and see what's going on right now. So here we are. We're going to be pulling up Apple. Start with Apple. And just very easy. It's a minus 70. And here's the chart. As this is coming up, we'll be putting our Fibonacci lines in and also some of the other tools that we use to analyze the markets. Plus, we'll be looking, of course, at our trade triangles. Well, here's the trade triangles, and we'll just go like 3 months and 6 months. So here's the trade triangles. The weekly is down. That's the intermediate term trend, and the daily is down. Not such a big deal with the daily, but the long-term and monthly trend is still down. Now, if we take our Fibonacci tool, which is right here, and we go from the highs down to the lows, right here, that's the last major low, you can see we're right here at 61.8%. The market's trading at 618, very oversold. The question is it going to go further? I don't think so. I think right around these levels, Apple's going to regroup, and maybe not a buy today, but certainly I think you want to be looking to perhaps buy this on a Monday or a Tuesday. Tuesday, first thing in the morning, or late on Monday. Apple announces earnings this coming week, and that should give the market a stop. But generally speaking, if you look at Apple, if we go maximum on Apple, you'll see that the trend has clearly been on the upside. So this is no more than this pullback here, right here, and a pullback right here. Now, we may go a little further, but generally speaking, I think this is pretty much the 618 level, maybe 600 level is going to where the market's going to stop. And we're going to see this market reverse. It's very oversold. Again, every time we've gotten down here, it's actually acted pretty well. So let's just take a quick look at the weekly and let's get a bit closer in here. And there's the weekly. This is going to mark, well, here's a classic example. There's the doji line, confirmed the next week. We talked about this on our show several weeks ago before I left for Maine. And also you've hit this 1, 2, 3, this is the 4th week in a row that we're seeing this market come down. And again, I think you're getting back into that. If we just put our fib numbers in there, you can see that we're getting back into that kind of rhythm of support right there. So I think, generally speaking, we're close to a support level. If you wanted to buy Apple, this would be probably an ideal time. If you're a little bit more conservative, you want to wait until our trade triangles on the intermediate weekly turn green. So let's go back to our portfolio and start off as we normally do with the S&P 500. Now, of course, this being the anniversary of the great crash of 1987, you've got a lot of negative things coming out on the market. But of course, for the week, the actual market is higher for the week, and you're seeing resistance coming in right around the 1460 level, which is a key area. Now, let me just go back on a daily chart and show you what we're looking at. So here's the concern that I have in terms of if we just draw some very simple lines. This is like the line in the sand on the upside. So I'm going to call that right around the 1465 to 70 level. And here's the line on the downside. So right around these levels. So right around the 1425 level. is going to be support. So you're sort of trapped in this range for the time being now. The question is it going to continue down, or are we going to break on the upside? The market will tell us what it wants to do, but you're also in a situation where you're actually getting oversold in this market. Now, again, our monthly trade triangles are still positive, and they've been positive from the 14.15 level. So I think if you had a chance to buy at 14.15 in the next day or two, or let's say next week sometime, it wouldn't be a bad trade in my opinion. So let's just clear the screen, go to our next market. In the next market we're going to be looking at, of course, is going to be the Nasdaq. Then the Nasdaq is, we've been saying this for a while, the Nasdaq does not look as healthy. And of course, this is largely reflective on what's going on with Apple, which takes a disproportionate portion, a percentage of the Nasdaq itself. So here again, I think this market looks a little weak to us. If you just draw some very simple lines in here, see it's 3,085. The market's down below its original buy point, unlike the S&P. So that was the line in the sand. So you sort of round it off here, and you go from this level here, the 3,050 level, to the highs right here, and we call that 3,200. So you got 150 points to go from here. So you go, just these are 50-point boxes. So I think from here to here, I think you could possibly go down to the 3,000 to the 2,900 level, excuse me, and it would not be out of the equation, which is about 100 points lower than we are right now in this market. So generally speaking, you've got the monthly positive, which is right here, and the weekly is a bit negative, minus 70, possible emerging trend, but more like a trading range for the time being. So let's just clear that screen off and go to our next market. And that's going to be, I think, crude oil, which has had a really interesting day today so far. And the crude oil actually moved to its best levels for the week before reversing quite dramatically to the downside. And here you are, very big down day for this market. We are currently trading at around 90.78. We are lower for the week, about 50 points, but we've got this support coming in around 89.96 on the parabolic. So again, monthly up, weekly intermediate down, and daily down. So negative-wise, short-term down, but you also, it looks as though you're trying to, again, we talked about this on the show yesterday, trying to build a base right here to go high. All we need to push this market high is some really bad news. I mean, not as though we haven't had any bad news, but some greater bad news coming out of the Middle East, and that could just push this market way up here. Key thing, as we said in the show, is the 94 level on the upside. This is the December contract, $94 a barrel. If you go over that, we're going to go to $100, which is the previous high, and the key support on the downside is 88. So you're sort of in this broad trading range, and we're getting towards the lower end of the range. Not oversold yet, so we may see a little more pressure. But generally speaking, I think we've sort of overdone it. I think the sentiment today is, I think generally speaking, right across the board from the stocks to precious metals to crude oil is just like, let's get out of a position and just take that off. So that's how we're seeing it right now. So let's just clear that off. Go to our next market. In the next market we're looking at is the USO. Of course, this is a reflection of crude oil. And you can see there pretty much the same pattern. Started out, actually moved to its best levels of the week, reversed back down, outside week, potentially negative engulfing line to the downside. Let's see how that plays out next week. So let's move on to the euro, the US dollar. And this is, again, is looking, I think, more positive than negative. And if they ever get some act together in Europe, which is doubtful, but you see all of our trade triangles right here, all positive, indicating higher levels. We're looking for a 135 target zone, particularly if we get over the 132. But I think 131 was one of our original points. We got there. We pulled back. Still looking good. Still the triangles are green and indicating higher levels. So let's go to our next market. This is gold. Gold has come down quite a bit from the highs. You can see it's not acting very well today. The big psychological level on this market is going to be the 1700 level, which is about $20 lower than we are right now. We're very oversold. Again, this is a very oversold market. and you're looking for this market. Still very positive in my mind. 1670 was the original buy point right here on the monthly. On the short-term weekly, 1734, if you just put that in there, you'll see there's the size. And you can, again, depending on how you trade, this is monthlies for long-term traders. Weekly is for intermediate-term traders. Intermediate-term traders meaning you would take this basically a buy here and you would have exited this position. You'd be out of this market for the time being. You would not be short because the major trend, according to our trade triangles, is on the upside. So let's go to our next market, and that's going to be copper. Copper's under pressure. Certainly the 3.65 level, we talked about this before, we thought that would be some sort of support level. Clearly it's shrinking because the world economy is shrinking according to this, but this particular pattern isn't that negative to me, and I'll show you why. If you look at let's put some trend lines in here. So this would be one situation like this, and the other one would be like this. So again, this is where you're really seeing this sort of pattern. Normally you don't get patterns like this that are bearish. This market may just regroup and right around here somewhere and then start going higher. Again, this is the pattern, and we see this is more of a pullback to a bull market based on our monthly trade triangle. So let's clear that screen. And believe me, these markets are tricky. They haven't been easy for anybody, including the professionals. But if you trade with the trade triangles, you should be ahead, certainly for the year. Now this is silver. Silver, again, is not acting that well. It is oversold. I would say probably if we put our Fibonacci numbers in there, we can do it really easily and pull this down. We'll go to that low there. We've just had a 38% retracement. Can we go lower down to the $30 level? It's possible. We may want to regroup that to here, and if we do, then it's very much similar to the other market we talked about, which was the crude oil. So again, I think we're very close to this level, and also I think we could be seeing this market begin to find support on the downside. This is just liquidation that's been taking place. So let me just go back to our portfolio. We've looked at Apple. I want to take something a little bit different today, the 52-week highs and lows, some interesting markets. And to do that, we simply go to our triangles, or smart scan rather, and we'll look at the 52-week lows because the market seems to be a little bit soft today, and we can pull those up. So here, 52-week highs, 52-week lows, just click here. And you can see it pulls up a bunch of 88 charts. Well, that's a lot to go through, so let's do a little bit of pruning. So we want to see greater than $20 because you want to be short, and average volume 2 million or more. And we're just going to look at the U.S. exchanges. Now we're going to view this as a bar chart, so you can see equity, view as bar charts, and you have the option here of viewing them by candlesticks, line chart, and symbol list. So let's just go with the bar charts, scan them. Remember, we have 88 here. Let's see what it gets down to. 4. That's much more manageable. So here we are. Here are the markets. Checkpoint Software is looking really bad. There's a 52-week low there. Navistar, that's a short right there. Chipotle looks terrible. And these are the 4 markets that look like they could be lower on Monday. I think the odds are very, very high. So the rules are you take a position towards the close in these markets, short, and you would cover that position on Tuesday on the opening. Or if the market opens against you dramatically on Monday, you just come out of it right away. So, hey, lots going on. If you haven't read my new ebook, it's available to both on the blog. Just click on the link. It's 92 megs. There's some videos in there that'll help you, but I am very, very confident the ebook will help you become a better trader. So do that for yourself and for your family. I'm Adam Hewison for Market Club. Have a great weekend, everybody. I'll be back on Monday. I'll see you then.